Next up, we're going to have affordable ownership. This conversation will be led by Ms. Chanda with the City of Austin Housing Department. She is a program manager. I'm going to go ahead and now pass it on over and ask you to introduce yourself and allow the panelists to introduce themselves. Also, right in front of you is our timekeeper. You'll get a warning before you have to conclude the discussion to allow an opportunity for questions. And then at the very end, after questions, we'll let you know that time is up. Awesome. Thank y'all. And then enjoy this discussion as well.
Good morning. Look at all those faces. Hi, guys. Excited to see you. Welcome. Thank you so much again for attending. I'm happy to see all my partners in the room and my coworkers, and oh, I'm so mushy. I love it. I love seeing you guys. But thank you. Thank you for coming to this discussion. We're going to start with, I guess I should tell you who I am again. My name's Shonda Gaither. I work at the Housing Department at the City of Austin. I'm a housing development manager under our real estate services. And I manage our community land trust, also our long-term affordability, or what we basically call our deed restricted housing, along with our down payment assistance program. And I'm going to let my amazing panel introduce themselves, and then we'll start on some questions.
Hello, everyone. My name is Ashley Allen. I'm Executive Director of the Houston Community Land Trust. We started in 2018, so we're very new to the land trust community. We currently have 197 homeowners in our program, and we are currently a single-family home ownership CLT, but we're getting ready to expand into rentals and other housing typologies, as well as commercial, to utilize the CLT model as best as we can. It has many uses, and so we want to make sure that we're using the CLT model all throughout Houston in as many different ways as we can.
Hello, good morning, everyone. My name is Michael Winningham. I am a partner at Industry ATX. We are kind of new to the game, but 3 years ago we started our company to focus on affordable homeownership opportunities in Austin, Texas. And we've got a couple of projects in the works right now that we're really excited about. And so, yeah, my background is from Houston, born and raised, came to Austin as a musician, writing music, and ran a life parallel to music as a carpenter and as a home builder. And met my partners at Industry ATX, having kind of the understanding of how affordable housing could help not just a wide range of people, and especially in the workforce, in the music community, and in other communities where there was a great need for more affordable housing. And I'm excited to be here and share with you guys my experience so far in ownership.
Hi, everyone. Thank you, City of Austin. It was a good turnout. I love this. My name is Jamie Kirby. I'm the Director of Home Ownership and Empowerment at BCL of Texas. Anybody familiar with BCL? Okay, several, thanks. BCL has been a statewide organization. We've been here 33 years. It's a CDFI, Community Development Finance Institution, and started in the economic development and small business lending. And for about 20 years, we've also been in homeownership counseling and involved with homeownership programs. Our mission is stronger communities through building wealth. The primary ways you build wealth, besides saving all your life, are through small business and entrepreneurship and through home ownership. So that's our focus. My team we're a HUD certified housing counseling agency. So as such, we're the folks who put on homebuyer education classes, workshops, and then we do one-on-one housing counseling with people so that they know if they're ready for homeownership, if we do credit review and talk them through their personal finances. But also in that space, in the affordable housing field, we have partnerships. We couldn't do what we do without City of Austin. and as well as private partners with banks and lenders. So we have down payment assistance programs that we've assisted with and can direct our clients to other partnerships and opportunities. Thanks.
So awesome, we'll get started. I just want to frame the conversation a little bit. I know you're like, we're having a conversation about affordable housing because we need affordable housing, but you don't have fair housing without affordable housing. And so we're hoping today to discuss, I've got some questions and then we'll take some questions obviously, but just how are we closing that homeownership gap with communities that have historically been denied access? So from affirmative marketing to finance mechanisms, we're hoping that we're gonna tackle some questions today that'll help us all kind of see what part we play and what people are doing to get that done. So I'm gonna start with, I think we've pretty much covered what role your organization plays, but if you just want to maybe go down the line one more time and talk about what exactly you're doing at your organization. So if you're in Lion Trust, like how y'all are, what are you doing exactly that's a little different or new, or and the same for the other two.
So for us, we always say, like, we're not down payment assistance. We are about community. We're definitely about the C and the CLT and making sure that we're preserving community because we want to make sure that people, and that means not just getting people in homes, but making sure they can stay in a home. A lot of the work goes in on the front end to make sure that we're getting people to the closing table, but what happens when somebody gets into a home and they can no longer afford it? So with the Community Land Trust model, we're talking about long-term affordability. So you do have a tax benefit of being in the CLT. You're taxed at the CLT price, not the market rate value. You also are getting stewardship support, making sure that there's somebody there to make sure that the home is maintained long-term and making sure that there's no deferred maintenance on the property, because that also makes sure that the affordability remains, because we know that deferred maintenance is not affordable. When someone buys a home through the Community Land Trust, we're ensuring that the home does not need any major repairs in the first 5 years. So the way our program works, our home buyer choice, is that the buyer is able to go out and buy a home on the market just like a traditional home buyer. The purchase is then subsidized up to $150,000, and then they take out a mortgage for the rest of the amount. And then they are taxed on that mortgage amount, not, again, the market rate value, and then they earn 1.25% of appreciation on that property every year. So again, that property remains affordable, so when they resell at the restricted resale price, another family is able to come in and buy that home at an affordable price. So the money that is being invested into that home, you don't have to keep reinvesting, which becomes a problem when we're trying to think about affordable housing long-term, is we can never catch up. And so once you put that money in up to that $150,000, that homeowner is able to benefit, but then the homeowner after that also benefits. And so then you keep paying it forward. And so when we're again thinking about how do you keep somebody in a home, you're thinking about all of those things. You're thinking about the maintenance, you're thinking about the property taxes, not just can you get them in with a low mortgage on the front end and not thinking about how they're gonna maintain that on the back end. I think that's a really important part about the Community Land Trust model. And then also having people who want to stay in their communities as well. So we're also currently working on a program where people can put their homes into the CLT, where they can maintain the equity that they have, but freeze their appreciation so that they're not forced out of their communities. So that's another way in which we're talking about affordability, community preservation, because one of the bigger issues is people are just appreciation sounds great until that tax bill comes. And a lot of people, particularly seniors, in gentrifying neighborhoods, are being forced out because they cannot afford the appreciation on their homes. We have some seniors that are actually not fixing up their homes on purpose because they're scared if they fix up their home, then when the tax appraisal comes around the next year, they're then going to have tax bills that they can't afford. And so again, we're helping people put their homes in the CLT, get repairs on their homes, and then freezing their equity where it is so that they can stay long-term and then pass that down to their heirs. Because that's another issue as far as affordability too, is people want to talk about generational wealth. Well, if you lose the asset, or if your family can't maintain the asset, you know, your grandchildren or your niece or whoever you pass it down to, then that's not generational wealth, because if they can't afford to keep it, then what do you have? So putting it into the land trust then allows them to pass down that asset, and then the next generation can also benefit from that affordability and stay in the community if they would like.
Awesome. Thank you, Dr. Allen. Yes.
Yeah, I think you said some things that also parallel with how Industry ATX thinks about, affordability and how to attain it. Every city and every community is different, and for us, just getting to know your community, getting to know your city, and what is available to you to create affordable housing is so important. For us, there are a couple of programs in Austin that led us down the road of seeing whether or not we could provide ownership affordability in Austin. One of those programs being Affordability Unlocked, which at the time was, very new and green to the city. And our office is 3 people. So, we were still working our day jobs previously, pursuing Affordability Unlocked on an acre in South Austin, and also pursuing different funding opportunities for the project. And to do that, we had to put some skin in the game. We were lucky. We found an equity partner that was interested in investing in affordable housing. And so we were able to go into the planning stages for our first project, 23 homes at Menchaca and William Cannon, and then pursue these programs that were available to us to see whether or not we could make this project a reality. So there's a lot of risk involved moving forward, and it takes a lot of guidance too. We started quickly working with Homebase, which is the brokerage attached to Habitat for Humanity, and getting some guidance for them on what are typical floor plans for 3-bedroom homes in the affordable world, and just really having to immerse ourselves in this initial model of home ownership and what it would look like on 1 acre. And so really getting into the community, creating different partnerships, understanding how other developers, other municipalities and nonprofits are approaching their affordable options. All of these things are really, really valuable to kind of opening up the doors in different directions. So it takes a number of layers and levers to make things kind of move forward. And for us, I think the most valuable asset is just understanding who is working in the community and doing this kind of work, and collaborating with those individuals and entities and trying to push different kinds of projects forward.
I'll tail on to what you said about collaborations. It becomes very important, for instance, when we have clients and there are down payment assistance programs. Lots of cities, some counties use their HUD funding to create homeownership opportunities through offering down payment assistance. There are also banks creating what they call special purpose credit programs, where there might be more relaxed underwriting standards and guidelines to try to help people use non-traditional credit sources like your rent history or your utility payment history. If you have good payment history there, they might look at a lower credit score. And it's a lot of it is about putting those things together. With the down payment assistance programs and the bank programs, they will talk about layering those programs. You might be able to use both a grant program as well as qualify for a mortgage that has some special subsidies and incentives with it. But the devil's in the details. The bank may have one criteria for the income and debt to income ratios, how much of your income is counted toward your debt when they decide how much they can lend to you. And the public entities may have a different standard. So getting together with partners and really understanding those opportunities is important. BCL of Texas we also have a development entity within BCL of Texas, Texas Community Builders. Would call ourselves a small-scale builder. We have a project coming up in Dallas that will build 9 or 10 homes in the South Fair neighborhood of Dallas. We're planning a project in San Antonio. It's still in the early stages to do micro homes, which are not smaller than tiny homes. They're the next step up from tiny homes, but smaller than most cities would allow without special zoning. So collaborations and partnerships are very important. As a lender, a nonprofit lender, BCL has access to funds. We raise funds from private capital, usually from banks. We have some funds from the Treasury Department, and we have some funds from our own activities as well, our own lending. So we're able to customize programs. If at times we've had funding from one bank or another bank for mortgage lending programs or single-family residential home ownership, and we partner with them. In Austin a few years ago, the LIFT program was big. You know, when those opportunities come around, we can design the down payment assistance to go with their programs and offer better entry to homeownership. In the counseling area, you know, it's just a matter. You were talking about taxes. Listen to another agency was talking about that so many people don't apply for their homestead exemption. After becoming a homeowner, if you don't get your homestead exemption is there from the state to exempt you from a certain portion of property taxes, so that homeowners who occupy their home, and it's not an investment property, it's not a summer home, do pay somewhat less taxes than they would otherwise. And if you don't know, and you don't know what you don't know, you may miss out on thousands of dollars over the years just in paying for property taxes. So counseling is very important up front, teaching potential homeowners not just about the ABCs of buying the house, but of sustaining home ownership in the long run. And just another word on that, doing those one-on-one counseling sessions and classes and talking to homeowners about affordability. When you get out there with the realtor and they're showing you properties, and the lender gives you a pre-approval letter, and it says you can buy a house that costs this much. But it's your decision to buy a house that costs something that you can afford. And you have to leave room for emergencies and reserves and other priorities in life. And on the back end, our counselors also see people for mortgage delinquency or foreclosure prevention. Foreclosure prevention counseling. And it's just a shame how many people we see that have just been in their house a couple of years, but they bought more than they could afford. And sometimes it's a matter of just waiting a little bit longer to work on that credit so you can get a better interest rate. Sometimes it's a matter of saving a little more so that you can put a down payment and you have some equity and a little flexibility in there. But like I said, you don't necessarily know what you don't know, and people get advice from everywhere, right? You get advice from family, you get advice from the realtors, you get advice from loan officers. So a HUD-certified counseling agency, whether it's ours or many others across the state, gives you a trusted source for information.
Thank you, guys. We're going to move into the hard-hitting questions, my investigative journalism. How are we making sure that the people that have been historically discriminated against have access to affordable homeownership?
Okay. Yeah, for us, when we started the CLT, one, it was a challenge because people didn't know what a CLT was, and all they heard was don't own the land and freaked out. And so one of the things that we really focused on was actually engaging community and having conversations first. It wasn't about, hey, we have these homes, don't you want to buy one? It was actually going to where people were and making sure that we were reaching people in their community. It wasn't, I know, I will say this, the city will hold events, virtual events and home ownership workshops and learn more about A, B, and C in the middle of the day during lunch hours, but people are at work. Or if you're not on their web server, you won't even know about it. So how are people supposed to actually know about the things that are offered if you're not going to them? And so for us, it was one thing that we did was we got people from the community to help us. So I have a community organizing background. I was a community organizer in Chicago. When I came to Houston, I went and found a community organizer in the neighborhood we were starting in Acres Homes, and she was a business owner. She was also a community organizer and a formally trained community organizer, and we went out together and went door knocking. We had a HUD certified counselor that was part of the team as well, and we would go to the multi-service center and put out flyers. We would go to the grocery store and hand out, and we did a table out in the front of the grocery store. We went and talked to the pastors of the churches in the community and got them on board and put it in the church bulletins. And then we would have monthly events at the library in the neighborhood and at the multi-service center. And then that was how the word started to build. Also, as the houses were going up that the city was building, we could point to the houses and say, you could have that house. It was real to them. So then connecting what we were saying to reality also helped. It wasn't just us talking, because again, a lot of communities that have been disenfranchised, they hear a lot of talking and don't see a lot of action. And so we were able to have the conversation about, hey, do you see what's going on in your community? Here are a bunch of homes, and they were like, well, we can't afford most of those. And we said, yes, there are a lot of homes that are being built that are, yes, not affordable for the current community, but hey, this house on the corner, that one is going to be part of our program. And they were like, oh, really? They're more like that? Yes, they're more like that. So we started talking to them, one, about what was happening in their community and getting them to talk about the affordability issue and getting them to talk about their frustrations about how they were feeling like they weren't going to be able to stay, or that they had family members that had moved out, before we started talking about the selling of the homes and the CLT and all of that stuff. So really talking about and connecting with community in their community, and not just saying, hey, we have this great program, hopefully you can find out about it. We had big issues back with disaster recovery. A lot of people who needed disaster recovery funds did not get it because they didn't know the process. They didn't know where to go. They didn't have access to get there. They didn't have computers. They didn't know where their documents were. The system was not set up to support them. And so the biggest thing is, again, meeting people where they are. And we say that a lot, but that's just one way to, that was just the one way that we did it, was getting somebody who was from the community, and again, putting our information where people could actually see it, and then connecting with them on something that they actually could understand and that they were seeing with their own eyes. They saw what was happening in their community. So then we were able to identify a problem and then bring them a solution. And then they were able to see a solution in real life and not just one that we were talking about. Again, they were tired of talking. At that point, it was like, okay, well, how many times are you all going to say we have these programs, or you can do this, or if you go over on the, on the other side of town, they can help you. No, there's help right here. The lender, we had our first lender, he would even come out and come with his table and say, hey, here's my card. Let's talk about where you are. Call me directly. And so you could put a face with, with who, you were going to be talking to and working with, so it didn't feel like, oh, well, here's a number and a card, and hopefully I'll be able to contact somebody, a nameless, faceless person at one of these organizations. It was, nope, this is who you're going to be talking to when you call, and they felt more comfortable, and that's kind of how we started, and it just went from there. You had a little bit of success, and the word spread after that, but that was how we made sure we were getting the people that we truly wanted to target. Was we went directly to them and not just saying, hey, we really want to help people in these communities and hope they would come to us. No, we went directly to them.
Yeah, I couldn't agree more. Engagement in the community is what you prioritize. Just the outreach and identifying areas where they're in need of affordable housing. And then there's some mystery always and some frustration, especially in Austin and Houston, where growth is happening so fast, so quickly, all around you, and you don't really know what's happening. You don't know really what's available to you, to your family, to your community around you. And bringing that awareness to the neighborhood and saying, we did the same thing. I had my laptop and, renderings and floor plans of the project that we were doing because nobody understood in the area what we were starting to plan for. And our hope was, we want to qualify you. Like, that would be the success story, is that you guys move into one of these houses and that we're a part of that and we can start that dialogue right now. And so just really, like, boots on the ground, like being there, being available, letting your presence be known, not a mystery, not some project that is getting fenced up and the community doesn't understand what's happening. Providing opportunities for that engagement constantly as you build your project, as you plan for your project. And another thing that we've decided to do is, we might have one or two projects that are ongoing for different levels of affordability in different areas of town. But what we can do is we can build a database, and anybody that starts to get to know us and the kind of trajectory that we're trying to provide in Austin, they can submit their name into our database, and that goes directly over to our consultants who help guide those individuals. We can't guide them all the way as the developers, but our consultants they can guide them. And if our project's not a fit, maybe we can find them another project that does fit for them. And so constant engagement, constant collaboration, and just demystifying what your project is, what kind of construction, what kind of development you're doing, and being a constant source out there for people to discover you is just a constant activity and is part of the job. And so we have tried to be that presence as well, and to be available and to hold that discourse on the regular for people.
I'm just echoing here, but yes, being in the community and accepting invitations to just about every resource fair or program that we can. We're a statewide organization, but our footprint is really the Dallas, Austin, and San Marcos is where we have our offices. We do get out of that footprint. We went to Paris, Texas for an event. We were at an elementary school last weekend because that elementary school has a very, very high Spanish-speaking population. And of course, we were at the Resource Hub this afternoon. And then when we're not in community events, we also sponsor our own homebuyer fairs. June 6th will be homebuyer fair being hosted by City of Austin. And in Dallas on July 20th, we have a homebuyer fair in DeSoto, Texas. So these are opportunities. Usually we have 150, 200 people able to come in and just talk about homeownership, get some workshops, but also meet different people in the industry, meet realtors, meet lenders, and meet us, and just get started, get on that path. As far as reaching out, doing outreach, of course there's social media, trying to reach people that don't always hear the message, I think is what we're talking about. And it's persistence as well, and just keeping at it.
So I'm gonna squish these two questions together, take whichever piece you feel comfortable, or both. But I think for some folks in here, we're really interested in how you're making it work. So how are you making the finances work? How are you getting the houses down that low? What programs are you using to make the development work? What are you guys using on your side to get the services out to people? And then what support do you need? What are y'all looking for next? What do you need to keep making this happen or to make it sustainable, just in general?
Well, first, for the single-family homes, to get them down, our average mortgage right now that our homeowners take out is about $106,000. So we do get them quite low. That's $150,000 per home. That's not sustainable. We got that money from the city. So that's how we got it that low. It was through TERS dollars or TIF, depending on which municipality that you're in. and there was those local dollars, those monies will always come in. So there is a way to continue to do some single family home, just not at that volume that we did initially. And there was a bond also that was passed that went to affordable housing, and so we got some of those dollars. So if there's a large tranche of money, I think that our model definitely is a way to move money quickly. And so if there's, unfortunately, Houston is a place where natural disasters tends to happen quite often, and so there's usually money that comes in. Unfortunately, we usually don't have a plan to spend it. I would say not just because it's a CLT, but we do have a way to get people in homes fairly quickly using our model. So unless we have a large tranche of money come in, that model unfortunately is not as sustainable for volume. But to set aside, let's say to do 60 a year or 50 a year, we could do that. So how do we keep it sustainable is what I've been trying to convince the city to do, and what we're doing with our own money that we're raising is to do different typologies. One, everybody doesn't need or want a 3-bedroom, 2-bath home, nor does everybody want home ownership at this time. And so for us, it's about not just doing traditional 3-bedroom, 2-bath or 4-bedroom, 2-bath homes. It's about doing 2-1s, 1-1s, smaller footprint homes, tiny homes, micro homes, duplexes, different typologies so that we can create more density. We don't want to be all on top of each other, no, but there is a way for us to be able to build to the need and create more housing. Because again, we were putting people in whatever home was available, whatever home was affordable. So there are people, single people in 4-bedroom homes because that's what was available at the time and that's what they could afford. But they may not have even wanted a house that big. So we have encouraged the city to really think about, hey, we have some lots that are 3,000 square feet. And the city's like, well, we can't do anything with those. Yes, we can. One of the things that we've done, and that over the next 2 weeks, we've partnered with Prairie View A&M's Architecture School and Rice's Architecture School, and their students' design studio project was to design some small footprint homes and duplexes in different typologies for Houston Community Land Trust so we can build our own portfolio, that if we see a lot in partnership with our land bank, that we can go and pick up an inexpensive lot and say, hey, we have a design that fits this particular lot, and we can start building typologies that are lower cost to build. And so we don't need as much, we don't need $150,000 to make it affordable. We might be able to build at cost and sell that home for $70,000 and keep it low, or rent it out for $500 a month and really reach that 30 to 40% AMI. Right now, our homeowners range from 40% AMI up to our cap of 80% AMI. But that is harder and harder and harder to reach that 60% and below. But if we had different housing types that were not as expensive, we could then continue to reach that lower typology. So that's what we're doing to keep it low, is expanding the type of housing that we do so that there's less subsidy that's needed to keep it affordable.
Yeah, we have to talk after this. I have to figure out what kind of building types you have, because we think about that a lot too. We think a lot about how we can innovate and create new spaces, more cost-effective spaces, because what we're talking about is the cost of construction and how costly it is in Houston and in Austin. And then how to layer that expense with different funding sources for it. Which becomes very complicated. And so the innovation part is crucial. Even your collaboration, our collaborations with, architects, it's like, how do we build, how are we as efficient as possible, and in the case of Austin, and still appeal to the flavor of Austin, still, bring a rewarding design experience to the homes that we're creating in Austin. And so, there's, I think that it takes a very creative layer of subsidies and loans, with construction loans being, 8% or above. That makes construction very expensive. So if you can find funding sources with lower rates, like FHL banks, in your region, that's helpful. It's not going to get you all the way there, but it's going to provide a little chunk that is very helpful. We try to keep our senior construction loans down to typically like around 30%. So that means, the other 70% need to come from, some kind of a subsidy from the government locally or beyond, and then layered with other opportunities to keep it really simple. That's the current climate that we're in. But then thinking about types of construction, what can we do that can help us, create homes that are also time effective? We're spending a lot of time in the world of shipping containers because we have a local vendor in Maynard, Texas. So I'll just give you a little example. That's down the street. And what can happen in his factory is he can manufacture these containers and he can have them inspected while they're being manufactured. So while we're preparing the site, those containers are being inspected and manufactured. Time can be one of your your biggest cost burden. So, thinking and approaching projects openly and trying to find innovations that actually work. I spent time as a home builder, and I had clients all the time who asked me to try this product or that product. And if it didn't have a history, if it didn't work, if there weren't active labor resources for that product or for that design idea, I wasn't going to try it. I didn't want to go down that road. We have to use systems that work and have a time efficiency and a budget efficiency with them, all the while being innovative. And so, we like our limits in our office. We feel like that gives us a structure to think within and still plenty of room to innovate. So I would our biggest obstacle is the cost of construction. If I had to name another obstacle, it'd be scarcity of, actual land in areas where we can provide ownership housing and where there's an active community, a historic community, and make an impact there. That would be another really big obstacle. Third obstacle is just, how can we make our planning the most efficient as possible from top down? Like right when we start, what do we do? Like, can we, how can we plan for this site in construction and in typologies of homes that we feel comfortable with applying to that land? And what resources are we going to use to get us across the finish line? So that's, kind of on a broad level, that's kind of how we're thinking of it, and the obstacles that get in our way in terms of vetting each project. Because we really have to commit to a project at an early stage as an affordable housing developer to even start planning. So we might even go under contract on a property and try to give ourselves seven months to really try to vet what we think our applicable ideas are to that project. So we have a lot of risk, and we have to think about these things very concretely.
Making projects work. We have a variety of things that BCL is doing or has done. For Texas Community Builders, our development arm, the project I mentioned in Dallas can work because of the city of Dallas's land bank. They're flipping vacant properties to us and other affordable developers and nonprofits. That just gets us the land cost, but that's a start, of course. Again, we can keep our, we have capital, so we can keep our finance costs low. But then we are always looking for other funding sources, of course. Home Partnership Fund from cities. The one other project that I could have mentioned in the last question, in Dallas we partnered with Inovan and started a builders roundtable which is aimed at developing, and we invited builders and developers of color to join a cohort. We're now in the second cohort. People who have already started in the building industry or development with some small projects, got their foot in the door, have some experience, but are figuring out how to make it all work. And they're doing peer learning, as well as we have bringing in, through that a series of meetings, bringing in speakers and talking about housing finance, and just trying to help them develop. And I understand from our CEO that they're really learning to work together and figuring out, project by project how these things work. And we're also looking at, we've been invited, I'm not sure if it's going to work out, but starting that in San Antonio as well. We haven't really talked about housing preservation and affordable housing much, but one other project, as a nonprofit developer, we can join a program, and I'm forgetting if it's FHA foreclosures or Fannie or Freddie, where we can have a first look at some homes and purchase them, rehab them, and then sell to homeowners. Again, as a nonprofit, we can keep our, the price that we sell it for doesn't have to be the market price. And in our, again, in our homeownership space, just the partnerships that we talked about. But I think you asked also what kind of support agencies need. And San Antonio and Austin have had large municipal bond programs where the cities, in addition to roads, in addition to parks, that affordable housing has become a priority. And I think more and more, for a long time in Austin, I'm sure, more and more in Dallas and other places, the public at large, but also banks and the private industry are understanding that affordable housing is an economic driver, and if you don't have affordable housing, your community is not going to attract the businesses and keep thriving. So Dallas also has a bond program coming up with a bond election coming up very soon. Housing Coalition was really advocating for $200 million out of a $1.2 billion bond package. We came in more around $60 million, and of course that's over a long period of time. I think it's a 10-year outlook for the whole bond program. So that's some help, but not enough help. But things like that come down to voters and the public. So there's advocacy and support is always needed.
I'm going to check with our timekeeper. Can I take a question? Are we rounded up? Or we're done? We're at 0? Great. Okay, so I do have one more question, and then I think we can take some questions, but I wanted to approach this with everybody just to see, in Austin, we do have, what I've been able to implement was a preference policy, which allows me to people think of it as a set aside, it more like allows us to make sure that we can fill a certain number of our homes each time based on if folks are from certain areas of Austin, if they used to live in Austin, if they have family still in Austin, and then also making sure that we're right sizing. So just these couple things we want to make sure that happen every time we have housing available, basically, right? We've got a portion that we're saying, we're going to try to make sure we do it with this portion at least, that this happens every time. And I'm just interested to see if that's what's happening or if you're able to make that happen in any of these other communities.
Okay, we don't have a preference policy. It's a first come, first serve, but we are intentional about, again, how we do outreach, how we get the word out. With our current projects where people are not choosing their home, we're actually doing developing in neighborhoods where affordable housing is almost non-existent because gentrification is happening so fast, and making those neighborhoods a priority. Also, we do have, 80% AMI is our cap, in making sure that we are looking really deeply into people's finances and making sure that we're not getting people who are, let me give you an example. So there is a CLT, I won't say which city, but they made it very broad and say, hey, people who are of, lower incomes and come and get affordable housing. And you had people who were trust fund babies and were like, well, I don't have income. I only live off the money that my mom and dad give me, so I'm low income. And they were like, no, this isn't for you. And it's like, but you said people who have low income, and this is what I make because I get money from them. So, you don't want to help them. You want to help people who are working every day and can't make ends meet. And so just being intentional about how marketing gets out. When you are just putting it out there or putting it out in, again through maybe your municipality, and so certain people only see those type of emails and you're not actually going into the target neighborhoods or reaching the target populations that you want to reach. Again, you're not going to them, you're having them come to you. This is how you end up not getting the population that you're looking for. So while we don't have any type of policy or preference policy, we do make sure that our outreach and marketing partnering with certain organizations. So Third Ward is a community in which we're looking to build, because we have not been able to get anybody in homes in Third Ward just because it has, the cost of land has gone up so high and the cost of housing is so high, even the subsidy of $150 people couldn't buy in Third Ward. So how do we make sure that the neighborhood that helped bring the CLT to Houston gets housing? Well, now we're being intentional about partnering with different organizations like Project Row House so that we can now go and we can work together to create housing. So that's another thing, the partnerships with community-based organizations that are working with the communities that we want to target. That's kind of how we're getting around having an actual preference policy, but still making sure we're targeting the communities that we want and the populations that we want.
Yeah, we do not have a preference policy. We don't do any of the eligibility/qualification criteria. Yeah, we have your policy, exactly. So what we try to do, like I said earlier, is we just try to stay really heavy on the outreach. We go to local businesses in the neighborhood. We let them know, hey, do you have workforce around here that is in the need of housing? Go ahead, here's our website. Make sure you put throw your name in the hat. Or we go directly to those communities and start engaging them, letting them know who we are, and just again, working with our partners to make sure that they understand that there is an opportunity where we're working, and what that project looks like, and how they would qualify, and who to talk to, and how to get that assistance to maintain their eligibility over the course of 2-3 years, which is really difficult. That's a lot of guidance for a new homeowner to throw their name in the hat and to stay qualified. Typically, there's even a smaller qualification window once a project gets closer to the end. But yeah, it's just stimulating, keeping everybody aware of the presence and the opportunity, and then allowing our consultants to help those individuals and those families stay part of that opportunity.
And it's pretty similar with projects that BCL is involved in, that it's a matter of choosing partnerships and working in the communities that you want to, where the help is needed. So again, no preferences, but the project in Dallas is in a historic part of South Dallas, and I will say, kind of going back to changes we've seen in the lending industry and mortgage industry, that some of the larger banks especially, but also Community Bank that we've seen when they develop those special purpose credit programs, some of this is coming from a recognition and leadership that for closing the gap in minority homeownership. They also are not explicit about preferences, but they do want to say, and will say publicly, that minority homeownership is important to them. And again, that's part of the marketing or the outreach piece. So people may hear that it's a minority program, but when it gets down to the nuts and bolts, anybody is eligible at certain income levels. So the outreach is important, and some programs also can do geographic targeting, where either they're targeting the neighborhood, maybe by census tract, or even carving, getting down into certain neighborhoods of a city where that can be eligible for housing programs or these specific mortgage programs. And I apologize, as a HUD housing counseling agency, I'm not allowed to call out specific banks, which is why I just keep saying lenders. But we see them using the products in certain neighborhoods, or where you already live, or where you'll buy the home and call it as an opportunity neighborhood.
Well, we just hit the timing just right. That is the end of our panel. I apologize if you didn't get to ask questions. These lovely people, I have bothered them on email multiple times. I'm not saying email them right now, but I'm saying I bet they would take a call or an email if you had some questions about how they're doing what they do and why they do it so amazingly. So please feel free to reach out. I'm going to round up today and say thank you for attending. Thank you for letting me moderate. Thank you guys for coming. I so sincerely appreciate it. And that's it. Thanks, guys.